Hey guys, Corey here. Do you want to know how you could turn $1 into over $200? Do you want to know how you could turn $50 into $5,000? Well, stick around because I'm about to show you how you can do that. Today, I want to talk about a really great strategy and how you can 400 times your money pretty easily. But before we get into that, be sure to subscribe and tap the bell if you guys are enjoying the videos. I am no financial advisor. It is up to you to decide which stocks you want to put your money in and what size of a position you have. I am here to coach you and guide you on strategies, technical analysis, and my opinions on general directions of stocks and how to get in and out and risk management. Today, I want to show you a trade that is really more like an arbitrage, which is something that's being given away for free. I want to show you how you can run a vertical debit spread on stocks that you believe are going up in the market. This is a fairly cheap and low risk way to potentially 100, 200, 500, even sometimes 1,000 times your money in as soon as 3 to 6 months or a year. This is absolutely crazy. The key to doing this is picking stocks with a pretty tight spread, and not only that, picking stocks in a sector which are very volatile and have a lot of movement, such as the AI and the tech sector, which is why today we're specifically looking at SOUN, how you can 50x, 100x, 200x, even 500x your money for relatively pennies on the dollar. I want to show you how you can grow a small portfolio. If you only have $50 in your portfolio, you could turn that into $5,000. I also want to show you how you could even potentially turn $25 into $5,000. Let's get started. Okay, guys, this is a really bullish strategy. However, considering SOUN just hit a recent high of $10.51, I'm going to show you what would happen if SOUN was to hit $17 in a year. Think about that. SOUN just went from $2 to $10 in only a month. That is an $8 jump in 1 month. It only has to go up $10 to $12 in a year. Basically a little bit more than it did in 1 month, but it has a whole year to make that move. It's very likely that SOUN could do something like this and end up over here as soon as July or August, let alone next January. Let me show you a strategy how you could 200 or even 500x your money on SOUN. So we're going to go over here to SOUN. We're going to select expiration date January 2025. And then we're going to go to buy and call. And you can do this on any brokerage account. You can also do this in the future just by setting your expiration date at least out 8 to 10 months, preferably a year. January is the most liquid option out of the whole year. It's the calendar year and the monthly options all at the same time. This is the most liquid options date you're ever going to find is January 17th or the third week of January, because the third week in every month is the traditional expiration for options. And to have it in January is not only the monthly, but also the calendar year at the same time. So January 17th of 2025 is going to be a very liquid option for most, if not all stocks. We're going to go ahead and look at SOUN in January 2025, and we're going to buy the $17 call, and then we're going to go ahead and click sell, and we're going to sell the $20 call. If we look at the $17 call option, the bid and ask spread goes from 35 to 65, and on the 20, it's 35 to 55. So we realistically could sell this one here for about 45 or 50, and we could buy this one here for about 55, maybe 60. Now, on the short position, we should be able to get 50 out of this. On the long position, we should be able to buy this for 50 or 55 because the mark here is 50 and the mark here is 45. So realistically, there's a $5 spread. We can do that. You're not going to get filled at 0. 5 is going to be a little tough, but we should be able to do it, if not 10. But we'll go with a 5. We'll click continue. You're going to see here you're risking $5 to make 295. This right here is a 60x return. If we were to buy 10 contracts, that would cost $50, and that would be $3,000 profit. And what's going to happen here is as soon as SOUN hits $17, we start increasing profits at this point. and you'll see that the profits continue to increase and they flatline at $20. No matter where the stock price goes after $20, we stop making profits. And the reason for that is because even though we're buying a call, we're selling one to recoup some of our money. So once the stock price hits the short position at $20, the call that we sold, it starts increasing in value and they're just canceling each other out. If you hold this till expiration and it's in the money, meaning the stock price is above $20, you're going to get assigned and you're going to have to sell the shares, which you don't have, at $20. So you're going to end up having to spend $2,000 per contract. However, you can then exercise the $17 call option that is now in the money. And then you can use that to fill the assignment and you keep the $300 in between of each contract. So if you had 10 contracts, you would make $3,000 minus what you spent of $50 equals $2,950. So I'll explain this one more time. Just make sure you guys understand. You are going to get assigned if the strike price of the stock SoundHound is say $21. It's over the short position, the call that you sold at $20. You will be assigned and have to purchase those shares at $20 a share. So there's a contract with 100 shares. That's $2,000. However, you'll immediately exercise your long position, which is the $17 call right here that you purchased. And that means you can purchase those 100 shares for $1,700. So you are scratched to here. So at expiration date, if SoundHound is at $21, which is above the $20 strike price of the short position, the $20 call you sold, you will get assigned and you will have to sell the shares, which you don't have, at $20 a share at 100 shares per contract, which is $2,000 per contract. You will collect that. However, you can immediately exercise the $17 long position call that you purchased right here, and you can exercise it for 100 shares per contract for $1,700. $2,000 minus $1,700 is $300. So for every contract, you will profit $300 minus the $5 you spent, which is per contract $295. That's what that means right there. It's basically the difference between the two strike prices minus what you paid. I do not recommend holding it till expiration. Now, if this happens before January, let's say as soon as July or August or maybe even June, you can just sell to close this entire position for a profit, which means you'll be able to make most, if not all of this profit if the stock price goes above 20. The only reason I'm suggesting at least January of 2025 right now, or if you're watching this in the future, at least 8 to 10 months out, is you want to give yourself lots of time for the stock to be able to move and to be able to move in that direction. In the AI sector, it's not out of the realm of possibility for a stock to go up 20, 30, 50%, even 100% when they're this small. I personally am going to open up 50 contracts. I've already set that and queued it. So that's $250 to make $14,000. The chances of SoundHound going to $17 or $20 in a year is very reasonable. If they can beat the earnings for the next couple of earnings calls, then they definitely have a shot of doing this. The one-year price target on SoundHound already is $10 to $12. It only has to beat the consensus by 30 or 40% in a year, and we could just make insane amount of profits. Think about turning $250 into $14,000. Let's say you wanted to buy 100 contracts because you were willing to put $500 into this position. You could make $30,000. However, if the stock price doesn't go all the way to 20 and it only goes to say $18, you could take a partial profit of $9,000. So for every contract, if it goes to $18, which is only $1 above your long position, you're making $120. So realistically, you could turn 5 into $120 or $150. It doesn't have to go to 20. Anything over 17, you're now gaining profits. Another thing I just noticed is that we can go out to January of 2026, which right here, the mark is $1.23 per contract, and this one's $1.28. 110 to 145, 115 to 130. We could realistically sell this for 125, and we could buy this for 130 or 135. So a $5 to $10 spread, and you would get almost 2 years. You can see the spread is between -20 and 30, which is 50. So 5 plus -20 is 25. So 5 is the middle. So realistically, I would much rather do this January of 2026 if you could. It gives you almost 2 years for SOUN to go up $10, which it almost did in a month. And now there's a 2-year time window to do this. So I recommend you play with it just a little bit to make sure you guys can get in at a proper price. What I've done here is I've just noticed that the $20 call option is a little bit better than the January 2025. We can see here the asking price on the short position is $1.30, probably get filled at $1.25. The long position is $1.45 ask, but we could probably get filled at $1.40 or $1.35, meaning $1.35 we could probably get away with here, and we get away with $1.25 here. So there's about a $10 spread to really get filled. But if we really want to push the envelope, we can see on the long position. But realistically, if we want to wait and try to push it to the limit, which is what I'm going to do, I am going to sell the short position here at $1.30. I'm going to try to get filled at the ask price. It's going to be a little difficult to do that. And then on the long position, I'm going to try to open it at $1.30. To offset that, I'm going to put in $1, which is going to allow $1 more of wiggle room. Probably 2 or 3 is what it's going to take to get filled. But if I can get it filled at $1 at 50 contracts, I can turn $50 into $15,000. However, because the asking price here, $1.35 is pushing it. Probably going to need to do $1.40 there and $1.25 here. So realistically, I think $10 is what's going to close this. If I sit day and night on it, 5 is probably best. Not going to get much better, most likely, than $1.35 or $1.30 on the long. And you're probably going to be looking at best $1.25 here. So a $5 cost is what you're looking per contract. You can maybe sell 10 contracts, $50 into $3,000, and then click review order. And you guys got 2 years for this to play out. It's a very long call, literally and figuratively, and a very bullish strategy, but you can turn $50 into $3,000. So it's worth the wait. Now remember, trading has inherent risks, and this is a very risky, very much a Hail Mary play. So only put in money into this type of trade that you're willing to lose as a long shot. But if it plays out, you're risking $50 to make thousands upon thousands of dollars. $50 to some people is a lot of money to lose. So you got to be very, very careful. Thank you so much for being here. Appreciate you guys. We'll see you on the next upload. Be sure to give me a thumbs up. If you have any questions, leave them down there in the comment box, and I will see you guys on the next video. Remember, let's grow our wealth together. Take care, guys.